Hey everyone, welcome back to the Turing Test podcast. And today we're diving into a topic that's kind of a big deal in the finance world: AI in high-frequency trading and algorithmic bias. I'm Jamie, your host, and with me, as always, is Rachel. How's it going, Rachel?
Hey, Jamie. I'm good, thanks. Ready to tackle this beast of a topic and try not to embarrass you too much in the process.
Oh, please, like you could ever embarrass me. Anyway, let's get into it. So high-frequency trading, or HFT, is basically using powerful computers to execute a large number of orders at extremely high speeds. And AI is like a huge part of that now.
Yeah, and it's not just about speed, right? It's about making decisions faster than any human could. But with great power comes great responsibility, as they say. There's a lot of debate about whether these algorithms are, fair or if they're just reinforcing existing biases.
Right? And that's where the whole algorithmic bias thing comes in. I mean, these systems are only as good as the data they're trained on. If the data's biased, well, the outcomes are going to be biased too. It's like garbage in, garbage out,
Exactly. And speaking of garbage, remember that time you tried to explain blockchain to me and it was like the most confusing thing ever?
Oh, come on. That was ages ago. I've improved since then. But seriously, the bias issue is like a real concern. These algorithms can perpetuate inequalities in the market. And, some people argue that it's just the nature of the beast.
Yeah, but others say we need to do more to address these biases. It's not enough to just shrug and say, oh, well, that's how it is. We need to be proactive in finding solutions.
True. But then there's the argument that trying to fix these biases could slow down innovation. I mean, do we really want to put the brakes on progress just because we're worried about a few bad apples?
Few bad apples? Jamie, we're talking about potentially huge impacts on people's lives and livelihoods. It's not just a minor issue. We have to balance innovation with responsibility.
Okay, I get it. But let's not forget that these algorithms have revolutionized trading. They've made it more efficient and opened up new opportunities.
Sure, but at what cost? I mean, there's also the issue of market stability. Remember the flash crash of 2010? That was like a wake-up call for everyone.
Yeah, that was pretty intense. But, we've learned a lot since then. Regulations have tightened, and there's more oversight now. It's not perfect, but it's a step in the right direction.
True, but there's still a long way to go. And speaking of steps in the right direction, Jamie, maybe you should take a step back and let me talk for a change.
All right. But before you do, just a quick shout out to Augmented AI, the producer of the Turing Test podcast. They host a variety of cutting-edge courses in generative AI, large language models, edge AI, robotics, and computer vision. You can get a free generative AI course at bit.ly/Turing Test podcast or go to www.augmentedstartups.com.
Nice plug, Jamie. Anyway, back to the topic. One thing that's really interesting is how AI is being used to predict market trends. It's not just about executing trades quickly, but also about making smarter decisions.
Yeah, and that's where machine learning comes in. These systems can analyze vast amounts of data and identify patterns that humans might miss. It's pretty impressive.
Definitely. But there's also the risk of overfitting, where the model learns the noise instead of the signal. That can lead to poor decisions and unexpected outcomes.
True, but that's why continuous refinement and testing are so important. It's not just about building a model and letting it run wild. You need to constantly tweak and improve it.
Yeah, and that requires a lot of resources, not just in terms of computing power, but also in terms of skilled personnel. It's not something you can just set and forget.
Exactly. And speaking of resources, there's also the issue of energy consumption. These systems can be really power hungry, which is not great for the environment.
Right, and that's something we need to consider as we move forward with AI in finance. It's not just about making money, but also about being responsible stewards of our planet.
Absolutely. And on that note, let's talk about the future. Where do you see AI in finance going in the next 5 to 10 years?
Well, I think we're going to see more integration of AI across different areas of finance, not just in trading, but also in risk management, fraud detection, and customer service.
Yeah, and I think we'll also see more collaboration between humans and AI. It's not about replacing people, but augmenting their capabilities.
Oh, so now you're all about collaboration, huh? But seriously, I agree. It's about like finding the right balance between human intuition and machine efficiency.
Yeah, you got me there. But it's true. And as AI continues to evolve, we're going to face new challenges and opportunities. It's an exciting time to be in finance.
Definitely. And for those of you listening, if you're interested in learning more about AI and finance, don't forget to check out Augmented AI University. Upgrade your skills and become an AI expert fast. Go to bit.ly/Turing Test Podcast to enroll in your free cutting-edge AI course at augmentedstartups.com. See you next time.
Thanks for tuning in, everyone. Until next time, keep questioning, keep learning, and keep testing those Turing boundaries. Bye for now.